All right, let's talk about something that's on a lot of people's minds, the U.S. housing market. It feels like a giant tangled puzzle, doesn't it? Today, we're going to try and piece it all together to figure out why finding a home you can actually afford feels, well, almost impossible right now.
I mean, this is the question, right? Why is it so complicated? It doesn't matter if you're a first-time buyer or you're just looking to move. The headlines are confusing, the numbers are kind of intimidating, and the whole process just feels completely stuck. So let's cut through the noise and break down exactly what is going on.
Okay, to really get a handle on this, let's start with a pretty jaw-dropping number, 65%. That is the projected number of U.S. households that will not be able to afford a median-price new home by 2026. Just let that sink in. That's almost two-thirds of the country effectively locked out.
And if 65% sounds a little abstract, how about this number, 88.2 million? We're not just talking about a statistic here, we're talking about over 88 million households, millions of families and individuals who are stuck on the outside looking in, totally priced out of the market.
You can almost picture it, right? Prospective buyers are running full speed toward that classic American dream of owning a home, but they just keep slamming into this massive affordability wall. And this isn't just a small hurdle. For so many people, it is a complete and total barrier.
So, this leads to the most obvious question in the world. If people can't afford homes, why don't builders just build more affordable ones? Well, to answer that, we really need to step into their shoes. Turns out, it's a very tricky balancing act.
And to get inside a home builder's head, you have to understand this one key metric, the Housing Market Index, or HMI. Think of it as a confidence score for the industry. Anything over 50 means builders are feeling pretty good, pretty optimistic about the market. Anything under 50, well, not so much.
And here is where we are right now. The latest reading for the HMI is just 36. That is way down in negative territory. And when builder pessimism gets this low, it has a direct impact on their decisions, on what they choose to build, and maybe more importantly, how much of it.
So this is the dilemma they're in. On one side, they are facing some serious headwinds. Buyers can't afford the houses they're selling, land and construction costs are still really high, and the index measuring foot traffic from buyers is at a dismal 22. But at the same time, there are some tailwinds. The cost for them to get loans to build is actually falling. So you can see they are caught right in the middle of these opposing forces.
Now, the puzzle gets even more complex when we look at the signals buyers are getting, because there is some good news out there for people looking for a loan, but it is not having the effect you might expect at all.
For instance, take this number, 6.17%. That's the average interest rate for a 30-year fixed-rate mortgage, which recently dropped to its lowest point in a month. Now, on the surface, you'd think, hey, cheaper to borrow money. This should be a huge incentive for people to get out there and buy a house.
Which leads to the big question, right? If it's getting cheaper to borrow, where are all the buyers? Why aren't we seeing sales just take off?
Well, the answer is right here in this really stark contrast. Applications to refinance an existing home loan, they jumped 7%. Current homeowners are grabbing the chance to lower their payments, but applications to actually purchase a new home, they fell by 3%. It shows you people are way more focused on improving their current financial situation, not taking on a massive new one.
Okay, let's get to the final piece of this puzzle, and it's what a lot of experts think is the root cause of this whole mess: housing supply. Because it's not just about how many homes are being built, it's about what kind of homes are being built.
And this data just reveals a massive disconnect. Look at these numbers. The construction of multifamily units, we're talking apartment buildings, condos, that's up by over 17%. But the construction of single-family homes, the very thing that so many American families are looking for, that's actually down almost 7%. So yeah, we're building more in some areas, but not more of what's in the highest demand.
So what's the way out of this? Well, according to the industry itself, it all comes down to this. The National Association of Home Builders argues the only real path forward is to enact policies that will, in their words, bend the construction cost curve. Basically, we have to find a way to tackle those costs head-on so builders can create more housing that people can actually, afford.
So to sum it all up, the market today is basically trapped in this really difficult cycle. Buyers are squeezed by high prices, which absolutely crushes builder confidence, which in turn leads to a shortage of the right kind of homes, which of course keeps prices high. It's a tough feedback loop of all these competing pressures.
And that leaves us with one final, crucial question to think about. It seems pretty clear the market isn't going to solve this on its own. So the real challenge is figuring out which key, Whether it's policy changes, new technologies, or some other economic shift, will finally be the one to unlock the door to affordable homeownership for those 88 million households still on the outside.